There's an interesting article kind of giving a different outlook to what we've been kind of exposed so far when it comes to the future of AMC stock and what is going to happen with the mother of all short squeeze. All right, so I want to dig a little bit deeper into this theory. Because I do believe, it has a high chance of getting us closer to what we are all here for, the mother of all short squeezes. So, what this theory is all about? Well, it's about the fundamental future or the short-term future of AMC. All right. So you know that AMC is already a leader into the sector when it comes to entertainment or movie theater operation. All right. AMC is definitely the leader of that. It's the company with the most amount of theaters around the globe, and they have some other acquisitions they make in the next coming months if that's where the company wants to go because they have the money to do so. But what is interesting is COVID came here and actually gave AMC a potential lead in the next short-term future in case things go south. And that's really what is the key of this theory, because if AMC ends up being the only monopole company operating in this sector, then dollar sign for us, folks. Look, in 2020, with COVID restrictions and everything, bunch of companies in the movie theater operating or entertainment industry just went bankrupt or in the brink of filing bankruptcy. But, excuse me, with AMC, things are looking quite good, all right? And that puts AMC in a very interesting position because many of AMC's struggling competitors will eventually disappear for good. Cinemark and Cineplex are essentially zombie companies, firms that can barely cover interest on payments on the debt they have, let alone the principal. And here AMC is making, payment plans, refinancing things, but actually paying off debt with real cash money. And with the former facing bankruptcy, it's only a matter of time before creditors start liquidating even the things nailed to the ground. That's leaving AMC as a company as one of the few theaters company that might survive the crisis. All right. So if you just pause here for a second, the theory around which the short sellers were kind of dumping and scooping shares or shorting shares of AMC is because it's going to file bankruptcy. But now this is a total different story we're looking at with AMC. Not only counting what this article is kind of portraying. All right. Now moving on. If you kind of go and look at what AMC can do in the future in this position, then you cannot just wonder and think, well, what about the fair value of the price? Well, the fair value is definitely around $20 or $30 a share. That is the price of AMC without the short squeeze, considering what the company it's valued at. Because when you look at that, there's definitely a gap between the $6 and some change AMC is currently trading at and the real value of AMC if the company was to be sold or bought out today. It wouldn't be buying that at this price because the value is definitely not reflected in the share price. This is without the short squeeze being taken into account. All right. Now, something else to mention is that AMC, based on that, has some very potential upside for people looking to have some quick money to be made fast. Look, historical data tells us that stocks like AMC tend to outperform in the long run. The theater chain trades at a relatively low 1x forward price to sales. That is 30% less than the meme rival GameStop. They call it rival based on whatever. On average, these low price to sales companies can outperform by up to 5% per year if you're patient enough to stick around. But if you want to join out the meme madness fund, buying several shares of AMC stock isn't the worst idea in the world. Remember, this is something that one of the brightest mind in the stock market, Jeremy Siegel, professor at Wharton Business School, mentioned months ago, telling people that, hey, if you're willing to have some exposure in this market, maybe allocating 10% towards meme stocks such as AMC is not that crazy. Actually, it's a good thing because of the volatility. All right. So if we kind of put things in perspective with everything here, In a nutshell, they're saying that if we are patient enough, without even thinking about the short squeeze, just by looking at what AMC is doing as a company in this market and what the price or the stock price can actually go from here, if we are patient enough, we can see things get very, very interesting just by these prices going to the normal values they are, or normal levels they are supposed to be. Now, because AMC and GameStop and the meme stocks are these high volatile stocks, whenever we get to a certain level, let's just say if AMC were to reach $20 now or $30 now, the thing is the shorts are this over leveraged and the liquidity in the market is this thin that it will just crush them because other people in the market will start chasing the fear of missing out, FOMO, and chasing the pump into AMC that the 20 will now become 40 and all of a sudden the 40 can become 50 and 60, and that's how you create truly the amount of short squeeze, because it will be just too much to bear for all the shorts that will start to cover, kind of bringing it to levels that nobody have seen before. So that being said, another reason to just be bullish, but a little more patient if you really see value into holding AMC stock in the long run.